But to talk more about these stocks as well as a whole host of stocks which we have to cover in the next 30 odd minutes, we have Rajat Bose from rajatbose.com joining in on the technicals. We have Parthiv Shah, direct at Tracom Stock Brokers, to answer all of your stock queries. Parthiv as well as Rajat, welcome to the show this afternoon. Well, before we, discuss a couple of these queries, wanted your thoughts on one, whether you're buying the bike, and two, what you think about all three of the stocks which are in focus: Hero, Bajaj, as well as Eicher. Rajat, let's start with you.
No, I don't drive motorcycles, and being a person who is already pushing 60, I don't want to buy a fresh. But I'm really very excited about Bajaj Autos bringing Triumph and Hero Moto coming up with, say, this Harley Davidson. So I would like to see how things pan out among both of them.
Okay, so you are not a person who rides bikes, but generally, Rajat, anything that you're liking in the auto space? Technically, the chart looking good?
Technically, both the Hero and Bajaj stocks are pretty good. I mean, apart from them, you can actually look at Maruti. These three I like, and they can be bought, but currently I would say that all stocks are more or less a bit overstretched, so buying on declines would be good. But if somebody is actually buying into these stocks with a longer term horizon, when I say longer term, I mean 5 years or more, in that case, any of these three can be bought because I see the next revolution in auto is about to begin, and this costly motorcycles and more SUVs and all. So it would be an exciting space to watch out for.
Parthiv, is this something which would pique your interest? Any of the three stocks, as well as probably buying one of the individual bikes?
Good afternoon, Ekta. See, basically, I think what we really like about all these happenings is that India's story is moving more towards premiumization. And I think that's a key reason why the entire auto sector is also buzzing. And surely, I think I'm a type of a person who would love to own bikes, but unfortunately, the traffic here in Ahmedabad might not permit. But not a bad idea to rent one of these over the weekends and enjoy a long drive. So what our sense is that all the three stocks, Hero MotoCorp, Bajaj Auto, and even Eicher Motors, I think it's very interesting play because, we have seen that Hero MotoCorp along with Harley Davidson, they've launched a new product. So as now Bajaj today, and I think they're trying to make huge inroads in the market share of Royal Enfield, where they have been masters in the 350, 500cc segment. And that's a segment where most of the players are eyeing. And it's not only that Hero MotoCorp and Bajaj are doing it for the first time. There have been other players who have tried their luck, but unfortunately they have not succeeded. So now we are seeing more entrants into this, and it will be an exciting journey because now even Eicher Motors, Royal Enfield, will have to up its game in terms of improving its pipeline even further. So the premiumization story is what is going to drive the re-rating of these auto stocks, and we do believe that there's a long runway ahead. Indian auto used to be more of the entry-level bikes or the entry-level passenger vehicle cars, which is now changing. So that is the story, I think, which investors can play, and it can be even played through the auto ancillary, which is a great proxy play because the content per vehicle is going up, and that is where more money can be made.
Okay, all right. Thank you for that take here. So that's about the auto space. But let's get in some queries that we've been getting from our viewers now. Nandan Kesav writes to us from Thane, holds 300 shares of Macrotech Developers bought at 575 rupees a share and 100 shares of Ipca Labs bought at 800 rupees a share. He is a medium-term investor and wants to know whether to hold or sell. Parthiv, what do you make of that? Because Macrotech came out with its quarterly update and it looked really good. How do you look at this one and Ipca as well?
See, Sonal, I was looking at Macrotech Developers data. So far in the history, they've sold almost like 75,000 crore worth of inventory. And if you see the pre-booking conversion into the final sales, I think they have a stupendous track record. And again, we saw the pre-sales data, which are reasonably strong. Yes, I think if you see quarter on quarter, month on month, there'll be some weakness. But I think year on year, if you see, there's a great strength. Momentum is very strong. Their project pipeline is also looking extremely strong, and I think estate sector has surprised everyone to the upside, and more essentially the residential space. Now even there are good green shoots of the commercial segment also picking up, but macrotech developers is doing extremely well. They're deleveraging as well. It's not only that they are kind of putting in more money, but they're also deleveraging, and they have a target to develop a very nice rental business, which would eventually turn to be a 500 crore sort of a rental business. So I think that is also a good strategy. They have a very good land bank and good project pipeline, which we feel I think investors should hold on to this stock, though it's become a little pricey. But the way real estate sector is going, I think one can hold on for the next 2 to 3 years. Talking about Ipca Labs, again here I think we saw this company following an inorganic growth strategy, and probably the market was a little spooked with that acquisition. But our sense is that they are having some of the challenges in the institutional side of business, where the price erosion is taking place, and again the US pipeline isn't very strong. So Ipca Lab as a pharma stock, not one of our favorites at this juncture. We prefer more domestic centric plays, something like a JB Chemical and Pharma or Alchem Labs. I think these are the plays where we feel there are more upsides and more tailwinds.
Okay, all right. What would your view be, Rajat, on both these stocks, Ipca as well as Macrotech?
First of all, I would agree with Parthiv. Even I don't like Ipca Lab. On technical side, even in this market, Ipca is actually languishing. And if it fails to take out 810 where its 200 exponential moving average is located, I think the investor would do well to exit this stock. And see, this was a huge rally. Most of the, I will mention a particular technical feature, that is, if you draw trading view data given by Money Control, and 9-day move.
Yeah, please go ahead. Go ahead, Rajat.
Okay. That 9-day exponential moving average has never been taken out decisively in many stocks, and these 9 days supporting the rise. Look at Macrotech. Even in today's session, it failed. It opened and it touched a low I think close to about 676, and now currently 703. So whenever this 9-day exponential moving average is tested either by the Nifty or by other stocks, they are jumping up and maintaining it, even though the market looks a bit top heavy, but yet these kind of stocks are maintaining their uptrend. So one should carry on. Regarding Macrotech, I would say that my targets would be initially 702, I think that is already reached, and 720, 752, and then 805. So these are the targets for Macrotech, and it's a good, but not Ipca. Ipca, there are better stocks. I would say I personally own a pharma stock, Divi's Lab, that is doing pretty well. I bought it when there were lots of negative things about it. So that kind of stocks in the pharma space are available. Why go for Ipca?
Okay, all right. Well, Ipca has been in focus also because of a lot of the observations which have come out on a couple of their facilities which have been inspected by the US FDA recently, such as the Ratlam as well as the Pithampur facility. That stock currently holding up with a gain of around 1%, but definitely doing better for Divi's Labs, which is one of the top gainers on the Nifty, and surpassed around 3,700 odd rupees as well. We need to take a short break, but hold on, Rajat as well as Parthiv. We have a lot more queries lined up on the other side. Welcome back. Well, the financials have given way today after a strong rally that we saw. So the Bank Nifty is down around 120 odd points. We have the mid-cap index, which is doing better. And the advanced decline ratio has given up its gains from the highs of the day, but nonetheless, it's still holding with almost a ratio of around 2:1. So around 1,781 stocks advancing to around 1,134 stocks declining on the National Stock Exchange. We're still waiting for the pricing with regards to the new launch by Bajaj Auto as well as Triumph. So we'll wait for those details, some more details which are flashing on your screen as of now. But let's get in another query. We still have Rajat Bose and Parthiv Shah joining in to answer all of your stock queries this afternoon. We have Mr. K.M. Sundaram who calls in from Chennai with a question. He has investments in Karnataka Bank. Hi, Mr. Sundaram.
Hello, hi, good afternoon.
Good afternoon. Tell us.
Yeah, I have 220 numbers of Karnataka Bank bought at 155 rupees. And seeing the price hike, I'm just wondering, now it's at 198. Is there any takeover bid or is there a target for this now?
Okay, and how long are you comfortable with holding it for?
No, I want to book some profit because before the correction starts.
Okay, all right, fair enough. I think it's the target price which matters more here, Rajat. So what would you recommend? Is it a good time to take some profits off the table when it comes to Karnataka Bank? Almost 200 rupees sitting on a profit as of now for Mr. Sundaram.
Well, should I?
Yes, Rajat.
Okay. In that case, I would say that although it has got momentum, there is a resistance around, say, 220 odd level. He can wait up to that. Otherwise, if it were to fall below the level of, say, 198, then one can book profits. At the moment, I would suggest that sometimes these spikes actually take you a little further. So it could be too early, but it's up to him. If he wants to book it, so much the better. But this stock will go much further up. At least 250 is on the cards, maybe few months down the road or maybe few weeks down the road. That's possible because after a prolonged consolidation at lower levels, there was a first spike and then it again came down and now it is on the final launch. So there is every possibility that it might go to 250. But since he wants to book profits, at least part profit should be booked and keep the rest.
Okay, part profit can be booked in Karnataka Bank. Mr. Sundaram, thank you for joining us today and joining us with your query on Karnataka Bank. Hope that helps. But moving on to the next query, Miryala Sai Babu writes to us from Assam. He has invested in 140 shares of Aarti Industries bought at 750, 40 shares of Infosys at 1700 and 800 shares of Manappuram Finance at 134 rupees a share. He's a long-term investor and wants his portfolio reviewed. Parthiv, well, there are stocks from various industries and various sectors. But tell us, what do you make of this one? He wants this portfolio to be reviewed.
Sure. So I think firstly talking about Aarti Industries, unfortunately, I think this company and the entire chemical space is facing a very tough time, knowing the fact that China has been overproducing a lot of these benzene derivatives and kind of because of lack of demand in the domestic markets, they have been dumping world around, which is leading to a lot of price compression. And even we are seeing that the results that Aarti Industries is reporting, they are seeing a lot of spread compression as a result of which the gross margins are contracting. And a lot of talk regarding their capex, they have a huge capex plan over the next 3 to 4 years, is now slightly into question mark because the existing capacities are not fully getting utilized. So I think this is something which a lot of these specialty chemical players will have to bear the brunt of for the next 2 to 3 quarters. And the current valuations no doubt are very attractive, but the gentleman will have to wait for the cycle to turn around. So I'm not suggesting a cost averaging here because of the outlook is little hazy for the next 6 months. But I think long term, these are quality companies with quality management, and as and when the cycle turns around, the swiftness in the price movement will also be quick to help the investor to exit in a profitable manner. Talking with the other stocks, Infosys, again, I think at 1700, it was kind of the peak of the valuations, and things were looking good back then, no doubt. But again, then all of a sudden, we saw a lot of headwinds coming from the US and the European markets in terms of the macro challenges, and as a result of which we saw even a quality name like Infosys correct because of the slowdown in the constant currency growth. But I think at this juncture, it is at a neutral valuation, and there seems to be less downside. Probably there is a potential buyback as well going ahead. So that is where probably the investor can get a good exit. And otherwise, it's a quality name one can hold on. We are not very upbeat on Manappuram Finance because out here the competitive intensity is very high. A lot of banks have also ventured into the gold loan financing business, and the margins are getting compressed here. So I would suggest a switch into some well-run bank, something like a Kotak Mahindra Bank, or if he is looking into a regional bank, then maybe a Karur Vysya Bank.
Okay, all right. So that's a whole host of financials that one can invest in. Thanks, Parthiv, for that. Well, let's move on now. We have Prasad Bhaskar who writes to us. He holds 1,100 shares of EID Parry, which he's bought at an average price of around 565 and is willing to hold on for 1 year more. He is a medium-term investor and wants to know what to do, whether to hold or to book losses or to exit. Parthiv, what would you recommend on this one, considering that EID Parry is closer to its 52-week low than its 52-week high, which stands at around 673?
I think it's at a very attractive valuation, Ekta. And if I look into the business model, it's a Murugrupa Group company. They have a fantastic 62% odd stake in Coromandel International, which as a company is doing very well. They are also going more into backward integration in terms of manufacturing of sulfuric acid. And even EID Parry's core business, which is a sugar and the sugar retailing, I think they're becoming more and more innovative. They've relocated some of the plants which are yielding better results for them. And even the ethanol blending is also something which is helping the company. So overall, our sense is that at current valuations of a trail 8 P/E, I think this stock is very cheap, and the investor could probably cost average here. Our sense is that giving it a next 2 to 3 years time horizon, I think better returns can be made from this company.
Okay, all right. Parthiv and Rajat, thank you so much for joining us today and patiently answering all those viewer queries. With that, we'll take your leave on this edition of Your Stocks, but do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.